Welcome to our economic review for February 6, 2026. We'll be breaking down the key market movements and macro indicators impacting the global economy. This professional, educational business documentary is brought to you in a newsroom style, utilizing the latest financial data. Remember, this is for educational reporting only and not financial advice. Today, we begin with a session overview, examining a period of market stabilization. The current reference for the asset we are tracking is $4,929.46 per ounce. This follows a period of localized volatility where valuations found support near $4,760 before establishing this current range during a session marked by renewed safe haven demand. Next, let's turn to the key macro indicators driving market sentiment. Key macro metrics show the dollar index cooling slightly to 97.61. Simultaneously, the U.S. 10-year Treasury yield is currently positioned at 4.22%. This comes after a week of shifting labor signals, including a recent miss in private payroll data, which has led to increased focus on potential policy adjustments later this year. Moving to the realm of policy and rhetoric, we assess the primary drivers of institutional sentiment. The primary driver remains the transition at the Federal Reserve. With the nomination of Kevin Warsh, markets are evaluating a long-term shift towards systematic balance sheet management. Current FedWatch data suggests participants are factoring in at least 2 adjustments to interest rates in 2026. Our technical segment focuses on momentum and oscillators, providing clarity on the asset's current trend. Checking core oscillators, the relative strength index has edged up to a neutral 54. This suggests a return of constructive momentum as the asset attempts to move back above its 50-day moving average. Data identifies a pivotal daily level at $4,850. The primary resistance for a continued recovery is established at $5,035. We are observing immediate support zones at $4,782 and $4,667. Finally, we analyze the structural forces influencing the asset's valuation from a global perspective. In industry news, Egypt has held its first meeting of the Gold Market Committee at the Cairo Stock Exchange, signaling increased regional formalization. This coincides with the structural impact of the U.S.-India trade accord's 18% tariff rate, which continues to influence physical flow through the Asian corridors. Geopolitical data reveals a continued focus on asset diversification. Total gold holdings within the BRICS member states are now reported to exceed 6,000 tons. This strategic initiative acts as a structural floor for valuations. To conclude our educational case study, let's recap the key market themes. In summary, February 6, 2026 has been defined by a return to stability and a rise in safe haven demand. The current trend suggests a phase of consolidation with an upward bias as the week closes. Thank you for viewing this educational case study. Subscribe now to receive our daily reports and stay ahead of the market.